Is the stock market ready to reverse? This is the question on almost every investor and trader's minds right now as we see this massive drop to the downside. We have videos, news, and articles coming out saying the mother of all recessions is on the way. And on the other hand, we have people saying this is a perfect buying opportunity to 10x your account and whatnot. So in this video, I'll be breaking down my honest, unbiased opinion based on the various economic and macroeconomic factors going on around the world as to what's truly going on and where the markets could be heading. I'll be breaking down the fundamentals along with a technical overview to give you an idea of where stocks could be heading technically as well, because I believe these two concepts hand in hand will prepare you better for what's next in the markets. And finally, I'm going to be ending this video off with 3 strategies that I personally plan to be implementing during this time. With that being said, if you haven't already, be sure to subscribe and let's jump into the video. As I discussed in yesterday's video about the week's upcoming major news and events, one of the key things that I mentioned was the Fed and their take on inflation. But the problem really isn't inflation, but the cost of bringing down inflation. The truth is that the Fed, any day of the week, would choose a recession and low inflation over high inflation that could definitely impact the economy and keep prices elevated. And this uncertainty by the Fed is really trickling into 2 groups, which is the business side and the consumer side. On the business side, we're already seeing business corporate debt fall for the first time in a few years as businesses really cut back on the debt they've been taking and start preparing themselves for a potential imminent recession. Along with that, we're also seeing a lot of businesses participating in layoffs. We're seeing big banks, we're seeing big tech companies that have went on major hiring sprees in the last couple of years begin to lay off people, and this is then causing the uncertainty that we're seeing within the consumers, right? One thing I want to mention with the consumers is that we've seen a massive structural change in the last few years in the overall workforce. During this period of the Great Resignation, we've seen people able to resign, find new jobs in similar industries, in similar level of positions, and even those being laid off didn't have trouble finding new jobs. However, with the Fed increasing rates, now is the time where these employees are now struggling to find jobs, especially in a time when consumer savings have fallen to drastic lows. Now, while this might sound all bad and scary, one thing I don't see a lot of people talking about is the fact that, a lot of these in a way low-paying jobs such as at restaurants or these industries like factories and all, they have been seeing worker shortages. In fact, just recently the amount of job postings outranked the number of applicants 2 to 1. And so as people begin being laid off from, let's say, major companies or major firms, instead of going back to similar level positions at companies that are hiring, they could start filling these jobs and helping out these industries that have been facing these bottlenecks due to a lack of employees. So in that side of things, that may ease somewhat of the pressure and give people jobs in those industries while helping those industries essentially reignite themselves. But a key thing again is the uncertainty of the Fed. It all comes back to the Fed and the potential that they may overshoot. Because if the Fed does overshoot, then even those industries that are facing worker shortages will no longer need those workers, and that's what truly causes a recession. So my overall verdict is that while many people may be saying that we're going to see a major recession and the market's going to continue to crash, or people are saying we're about to recover, I say it's just way too premature to really make a firm decision and tell you what is and what is not. The truth is that what unravels this week with CPI, PPI, and the Fed and their decisions along with corporate earnings and what corporations say in terms of their forecasts will really dictate the market in the next few months to the next year or so, maybe even, right? So I think instead of making these rash decisions, dumping or selling or buying heavily, it's important to continue to monitor the fundamentals and utilize the technicals, which we'll talk about, to your advantage to continue to profit and trade and invest smartly. Alright, so jumping to the technicals, the main thing that I mentioned at the start of the video is that the technicals tell a similar picture to that of the fundamentals, which is that of uncertainty. As we can see with the SPY, which is an ETF that essentially tracks the S&P 500, for the last week or 2 weeks or so now, right? We've just been consolidating at this level. We've begun forming somewhat of higher highs and higher lows, but we're forming this upwards ascending triangle, and we're getting tighter and tighter in this range, basically accumulating before either a breakout higher or a breakout lower. And this is essentially, like I'd like to say, a boiling point, right? We're reaching a point where we could either see moves higher or moves lower, and the reason for that is that we're also reaching a point where many earnings are coming out. Many news with the CPI and PPI coming out this week will dictate a lot of what the market does coming soon based on how good or bad the numbers are. So that's why we're seeing these accumulations. Even if I go to stocks like Apple, Microsoft, Amazon, that make up the major part of the S&P 500, what can we see again? We've been accumulating at these levels. Now, the reason why this is really big and really important is because it also means that major moves could be in the making. Right now with a stock like Apple, right, we are seeing a lot of selling pressure at this around $150 level. If, let's say, numbers are better than expected, right, they're good, they're positive, we could see buyers break above these levels and cause short sellers to cover and cause that push higher, right? Already it almost seems like we're forming an inverse head and shoulders with our left shoulder, our head, and our right shoulder before that ultimate breakout higher. Similarly, if news is negative, we could drop down to this, bottom support level here at about 135 and form, I guess, a head and shoulders, right? We get our left shoulder, we get our head, and then our right shoulder before that break below that neckline, and cause a lot of buyers who have been buying these levels to trigger their stop losses and cause that much bigger move to the downside that a lot of people have maybe potentially been anticipating. So that's what I mean by this technical is telling a similar story to that of the fundamentals, which is again uncertainty. We're seeing accumulation at these levels as both buyers and sellers are putting up a pretty much equal fight and waiting for whatever news comes out to then act on that. And these levels, these key support and resistance levels, while they're just plain and simple support levels, are going to be a key factor in terms of where the market goes by shorts covering or bulls covering when their stop losses are triggered. So that's why I'm saying at these levels you have to be careful and monitor the fundamentals just as much as the technicals. Now, one thing that I do want to mention is that a lot of this does look similar to a Wyckoff accumulation, and this is something I haven't seen many people touch on. If we take a look at a Wyckoff accumulation, it's essentially a period of, accumulation, buyers buying in and waiting for that opportunity to break out higher, right? We have initial pushes, some peaks, and then some consolidation before that major breakout to the upside. If we go back to a stock like Amazon, we can see something similar, a big push up, we push higher, some accumulation, and based on news, we could break out higher. But similarly, this could also be a distribution, which is essentially the opposite, right? We're consolidating and we break out lower. So I do want to highlight that we are seeing similar patterns of an accumulation, like a Wyckoff accumulation, but again, take that with a grain of salt because technicals don't matter as much as fundamentals, and that's why I made a real strong point to discuss it and put an emphasis on it at the start of this video. But again, the key thing I want you to take away from the technicals is that it's nothing complicated at this point. It's just, you don't need to worry about EMAs, SMAs, all of that. It's just simple support and resistance and evaluating the fundamentals and waiting for these key breaks. If we do get that break above, expect some triggering of stop losses and look to buy into that if we can confirm it as support. Similarly, if we break below, turn this previous level of support into resistance and follow through lower, look to maybe take a short position or expect further downside. So now, just to wrap up this video, I want to talk about 3 main things that you could be doing and I plan to be doing during these times of uncertainty. First of all is investing in sizes. I see people way too often, go all in or put too little amount of money. Have a set amount and really go and buy in sizes and look to average down, right? This is a perfect opportunity to deploy money slowly into these stocks and then profit. Secondly, I think the biggest thing people should be doing is also investing into quality stocks. A lot of people during these time periods, during the past couple of years, have profited off, high-flying tech stocks, money-losing companies, SPACs, and all these companies with no real fundamentals behind them. Do your research, and I talk about a lot of fundamental, good quality stocks on this channel, so be sure to watch some of my old videos to really get a feel for some good stocks to maybe be investing in. And the third and final thing that I plan to be doing, that you could also be doing at this point, is diversifying your investments. One big thing during these last couple of years is that I noticed a lot of people go all in on tech or go all in on, let's say, SPACs or crypto, and that's something you should never do. Even the Oracle of Omaha himself, Warren Buffett's main strategy is diversification and the positive impacts of that. The reason being is that, it limits your exposure to industries or companies that could face troubles during certain periods of times when other companies and industries might not. So diversifying and identifying companies in various different areas is something to definitely keep on your mind and on your radar as you begin buying into this massive buying opportunity that's starting to present itself. So with that being said, guys, that's the fundamentals and that's the technicals. The overall tone that I believe in is uncertainty and to be waiting and patiently waiting on opportunities rather than making rash decisions. A lot of people are saying, boom, we're going to the moon or we're getting crushed, but the truth is that's not necessarily the picture. So with that being said, if you enjoyed this video, be sure to leave a like. Go get my book, A Technical Trader's Handbook, on Amazon if you want to take your technical analysis to the next level, and I'll see you guys in the next one.